As a day trader, you don't need to hold your trades up to maybe the next day, right? So you only need to maybe look for those major movements or those moves that can give you maybe 50 pips, and then get out of the market. Maybe take only that one trade and call it a day, right? So in this video, I want to just give you those examples and what to do when you see them, or maybe how to take those trades when you see the market structure, right? So the first thing you need to do is analyze or try to understand the current market position and what the market is trying to do, right? So for example, look at this joint over here. Let's try to analyze from this zone over here up to this zone and see how we would have maybe taken those trades, right? So now let's start over here. So the first thing maybe you need to do is do this. Okay, you need to identify the highest zone. I mean, now the demand, the supply zone, or the support of the resistance. So let's say you did that, then maybe come and identify this zone, right? So after that, this is now the 4-hour probably. Let's go to the H1 and see what to do next, right? We want to wait as usual. We need to wait for breakout of the price, then now make our decision, right? So this is what's up. Let's try to understand over here. As we were saying that the market was moving in a sideways, or another way we can say that the market was moving in a ranging way, or in a consolidating type of nature. So look at this. So we can see that the market did that, hit that resistance, then came back over here. So with that, as usual, I would have made my entry only after the 1 hour candlestick did close bullish this time. So I'm talking about this candlestick over here, as you can see over here, right? So with that, that is when I should be taking my buy position over here. And now my stop loss, of course, the previous zone over here, we should be around 44 pips. All right, so now you can maybe target which maybe 1-to-1 risk to reward ratio rather, or maybe you can try to target the previous high, right, over here. Okay, so that's what's up. So this is about day trading. So look at that, risk to reward ratio over there, 1-to-1 probably. Then look at that, the market did hit that, and I believe most people do maybe trade breakout and retest, right? So if you are supposed, if you do trade break and retest, this is what's up. You can see that the market broke, then came back over here. So for that retest over here, look at that. Let's do this just a minute. Let's make that. All right, so with that retest over here, as you can see, the market came down. Then with that rejection, maybe you should wait for a breakout, but then take your buy immediately the candlestick closes above, right? But then you can see this time where the market did close, right? So if you did make your stop loss below over here, that means you was to hold your trade position up to whichever amount. But I don't like waiting for pullbacks or retests. So you can see this is what's up. So that is now, call it a day. All right, back this maybe that 46 pips over here, though the risk to reward ratio actually was 1-to-1. Back that and call it a day, right? So maybe the next day, let's see what happened. You come back to the market and try to understand or see what the market is doing. All right, so we should be removing everything once again. Let's do this. Okay, so now we've already done away with this zone over here. The market did that, so that's all right. So we're done with that. So now when you come back the next day, let's do this. Maybe you see that the market is giving us those structures. So the first thing, once again, you need to identify zones of interest. Okay, so we do this. Of course, we have this zone over there, and then we also have a support zone over here. Okay, so what do we need to do over here? We need to understand how the market will be probably behaving and see if we can make our decision. Okay, so over here, as you can see over here, see of course that the market is still in a downtrend. Okay, so we need also to respect the trend. Okay, so as that we also have this, that the market was giving us a new trend over here, so we don't want to ignore that, right? That's what's up. So with that, and also we need to identify that this was the immediate previous highest zone, was this zone over here. Okay, so with those zones marked, guys, so now we need to make decisions. So we can say that the market gave us a lower high over here, lower low. Now of course you can see that's a lower high. Okay, So now we have this zone and this zone, so probably we should wait to see if the market breaks out of this structure. Okay, so with that, let's go to the H1 and see what happened. We need to take, actually I do like taking my entries at the 1 hour. If you don't understand what I'm talking about, guys, you need to rewind this video. Okay, so you can see that the market broke out of a trend line over here. Boom. Now of course we did not get any reversal structure, so probably that is when you have to wait for a retest. Right, let's zoom in. So this is where we are actually currently. This is what's up. So the market did break out over here, then now probably wait for that retest over there. Okay, we want to make sure that we do take those great entries of that, then now wait for the market breakout of this zone once again. Let me zoom in. Immediate lower zone was this, of course, as usual. Then now look at that, take your sell entry now. Just a minute, let's adjust this. That's what's up. So now you just have to wait for this bearish candlestick, this time the black one over here, that great marabou's candlestick. Then now of course your stop loss now should be above this level over here. This is the zone, of course. And right now you're once again risking 41 pips. Then now target probably the previous demon zone, of course, that was a support. Right, so risk to reward ratio once again 1-to-1. Call it a day. You done. All right, so as you can see, when we look this clearly, let me just draw that this clearly. This zone over here, we can see that the market gave us a demand and supply zone over here. Let me just draw that for a minute. We have, this should be our supply zone or our resistance. Okay, then of course over here down we have our demon zone in place. Okay, so that's what's up, the easy way, right? So once again we're done with this, so let's continue. We just stay away from the market. We don't make any entries until the next day, right? So we wake up and the market this, let's go back to the H4 as usual. So it's the next morning, gang. It's the next morning. Okay, so when the next morning comes, of course we remember that the previous day we had this as a resistance. Now it was a support, now turn resistance. Okay, so let's see, we can see that the market went up. Okay, as a day trader, the market has not given us a position, entry position over here, right? So let's go back to this 15 and see probably if we saw something. Probably, let's see. Okay, at the 15, yeah, everything was clear over here. The 15, gang, the 15 here, everything was clear over here. So we needed to identify a zone that the market probably will play around, or that's what's up. So of course we need the market to break out of this resistance over here, and now that is at the 1 hour with the 1 hour candlestick. Then that is when we do take a buy entry, of course, because you can see that the market has already respected this support as now, and then as you can see, it's going up. So with that bullish candlestick, that is when you do take a buy entry position over here. Then stop loss now below our demon zone over here, of course. Then now you target this. We have this resistance, the immediate one. Okay, day trading, once again hit that 43, call it a day. Do not need to hold over here. That will now turn your entries into a swing position. Okay, so let me just see if I can maybe give out another example. I'll pick out a random pair and see how everything play out, baby. So that was USD Swiss franc. Let me hit the H4 and see. All right, one more. So this is what's up. Okay, let's try to see what the market did from that zone to this zone. Okay, so that's what's up. We woke up as usual. Then now we need to identify it. So let's start from this zone, around this zone over here. Okay, let's now continue. So we did wake up and see that the market is doing that. So we identify this is a zone over here, and of course we have this. Okay, so everything you just need to wait for a bullish candlestick to break out of that at the H1. Okay, H1, let's go back to at the H1. This was the candlestick over here. So that is when you needed to take your buy entry over here again. All right, sorry again. All right, maybe do like stop loss maybe there, then probably target that 1-to-1, call it a day. Okay, that's done. And let's proceed. Then now we can see that the market did this. We had this zone, then we also have a support zone over here. So basically what we are doing is just waiting for break of structure and change of character from the support and maybe the resistance. Okay, with that bearish candlestick this time, this is what I'm talking about. Let me show you. We have that. Then that is when you do take your seller entry now over here, make a stop loss above the previous high or the previous candlestick close, then target maybe 1-to-1 risk to reward ratio. Probably, as you can see, that is actually what's happening. And that's what's up. That was quite easy again. All right, let me see if I can get something around. Maybe remove this. Okay, so basically let me just draw. This is what I'm talking about. Let me draw. Okay, let's say that the market is doing this. The market is doing this, of course, as usual. The market does that, right? So now I want to do this. I want to identify those zones that the market has consolidated for some times, and maybe mark the support or the demand and the supply zone, right? So what do I mean? I need those zones that the market is doing this, is actually moving in a sideways zone. I mean sideways way, just like that, right? So I need to identify that, and let me do this. This is what's up. This is what I want to identify, right? So all I just have to do is wait for the market to break either of the zones, right? Either the support or the resistance. So if this was the market, all I just need is wait for a break of structure, that's change of character. If the market breaks with a bullish candlestick at the 1 hour, of course I have to take my buy position over here, then stop loss now below our rectangle over there, then now target maybe risk to reward ratio 1-to-1, call it a day. If I risk 41, I should be making 41 or 42, whichever, right? Then call it a day, right? So the reverse is true. If the market did break out of this consolidation to the downside with a bearish candlestick, then now, like this is what I'm talking about, I'll take a buy, a sell entry, just like that, target 1-to-1, right? Call it a day and come back the next day, just like that, guys. So I will repeat: identify a zone that the market has played around for some time, maybe just like that, then now box in, bring in your rectangular tool. This is what I'm talking about. Or rather, you can do this and make that a resistance, or then this is a support. Okay, then I just have to wait and see what the market does. If it breaks to the upper side, you have to take a buy over here, maybe target that 1-to-1. Then now if it breaks to the down, do that. Easy, right? So I believe that's what's up, guys. If you don't understand, guys, you need to backtest this strategy every day until you get there, right? So before you're putting real money, guys, backtest until you understand everything in depth. All right, so that's what's up. Adios, amigos.